Hey guys, and welcome to today's session. I'm just going to give everybody a moment to join, and then we're going to jump straight in. So just bear with me for 2 minutes whilst I just double check that the stream is successfully running everywhere, and then we'll get started. Can somebody in the Discord please confirm that you can hear and see my screen? I also can't find the comment section on Discord. It seems to have disappeared for me. I might have to leave the session on Discord and then reconnect. So just bear with me for 2 moments, guys. I'm not 100% sure why, but the comment section or the chat section in Discord isn't showing for me. So what I'm going to suggest is that if you have a question as we go through the session on Discord only, so I'm only directing this to the Discord guys right now. If you have a question throughout the session, I would write it in the English chat and just tag me, and I'll be able to check it as we go through. PDA Harry, good afternoon. Hope you're doing well. For the guys who are watching on YouTube and Twitter, you should be able to comment, and it will feed through to me automatically. So if at any point throughout the presentation you have any questions, please don't hesitate to put it in the chat. What I will do is, if it's relevant at that time in the presentation, I'll go over it there. If not, I'll hold it off until I've finished a slide. So please just bear with me if you ask a question. Now, we're going to jump straight into it. So welcome, guys, to the Darwinex Index session. In this session, we're going to go over what the index is and how it benefits both traders and investors, and also Darwinex as a business, and why I personally believe that the index is the future for Darwinex. Now, the index chooses the best talent that we have. Now, if you think about Darwinex, we've been around since 2012, so we've seen tens of thousands of traders. We understand from a statistical perspective what works long term and what doesn't work long term, or to rephrase that, what's higher risk or what's lower risk. Now, what we've done with all of this experience and all of the traders that we have trading through Darwinex is we've created what we call a Darwin of Darwins, which is basically a portfolio of our top performing traders on both platforms, Darwinex Zero and Darwinex. Now, the Darwin of Darwins, or what we call index, or INDX, is managed by our Darwinex Labs team, aimed at generating more stable returns with low correlation to the market. Now, what do we mean by the low correlation to the market? Essentially, if you're looking at a benchmark for investment performance, you're probably going to be looking at two things: property market or the S&P 500. Now, for traders and investors in the financial markets, the S&P is pretty much the benchmark. So what you have to do is outperform the S&P 500 with lower volatility. Now, we all know that the S&P is designed to increase in value over time with inflation and economic growth. And therefore, if you're investing in the S&P, you're kind of reliant on the market being up month on month, year on year, which it will be, okay, which is more of a long-term investment. The index is designed to perform regardless of whether the market is going up or down. So we have a low correlation to the market. We have trend following traders and mean reversion traders across a basket of different assets. Now, what that does for us is that it means we're not reliant on a specific market cycle or market condition or even volatility, because the index is designed to have a stable performance throughout all of them. Now, you might ask yourself, why index? Okay, so the Darwinex marketplace has been open for many, many years, where investors can come on and scout trading talent themselves and invest your capital into those traders with, a relatively similar process as to what we have with the index. The difference is we make investing easier for investors who want to fully delegate portfolio management to Darwinex. Now, if you're managing a large amount of capital, or you just want an investment that sits there and you don't have to worry about it, or you don't have to worry about recalibrating the portfolio at any given time, of course, the index solves that issue. You allocate into one and it's already diversified for you. For us and for our traders, it's a lever for attracting investment. We can go out to professional institutions to family offices, high net worth clients, whoever you can think of, and it's a single lever. It's a single product for somebody to invest into. Again, taking away the need for decision making, because historically, when a client comes to Darwinex, they have to create their account, they have to deposit their capital, they then have to do their research on their Darwins, unless they've, seen somebody, an asset manager, through a piece of content or networking, etc., and they already know who they're investing into. However, you have the decision-making responsibility as the investor to allocate capital to who you think is going to continue to perform. Now, that's okay, but what can happen is through bad periods or periods of poor performance, the investor's capital may stay stagnated. And then you give the investor another decision of what they want to do at that time. So the investor then has to decide, do I pull my capital from investment A and give it to investment B? And then, investment B might then go through a poor performance, and the investor can be left chasing tail whilst having to make all these decisions. Now, in the index, of course, it's already diversified. The performance, we update the Darwins included in the index based on performance, looking at the benchmark of their previous history, comparing their current performance to that. So the investor doesn't have to worry at all. They park their capital and they can leave it and let Darwinex Labs manage it for them. And lastly, we distribute capital more fairly among strategies. So again, an issue that we've had in the past is that capital can get diluted on certain traders and certain strategies, and rightly so. There's different criteria that an investor would look for when looking to allocate capital. An investor might want a certain track record length, or a certain return, or a certain drawdown, whatever it may be. And if a bunch of investors have the same criteria, what you can see is a dilution of capital goes to that specific trader or that specific group. With the index, we're providing the opportunity for more traders to get a piece of the same investment. So rather than an investor coming on and putting 50,000 or 100,000 into a specific trader, the 100,000 will be split between 100 traders or 150 traders, however many are included in the Darwin index at any given time. So for us, it allows us to provide our traders with a fairly distributed capital amount. And finally, the index is validation of our alignment with traders, or our alignment of interests with our traders. We want every trader coming through Darwinex to succeed and to perform well and to gain investment, of course. But again, because of the capital dilution that I've just been talking about, sometimes, fantastic traders can get overlooked. And so by us creating the index and being able to push more capital through to these traders who would often get overlooked, it gives them more incentive to keep going. There is a question through YouTube from Aino. What are the fees and costs associated? I'm going to be going through this shortly or further on in the presentation. So I'm going to come back to that question. So please don't think that I'm ignoring you. We will come back to that shortly. Now, the index is ideal for passive investors seeking returns without the need to actively manage their portfolio, of course. And also, I would add the caveat to that, it's a non-directional biased asset. Again, like I was saying, we're not reliant on a specific market cycle or a specific market condition. So an investor can put capital in and not have to worry about checking the market to see if it's up or down, or seeing if the stock market's increasing. They don't have to worry because they know that their investment is already actively managed, it's already being observed on a daily basis by Darwinex Labs, and that it's non-directional bias. Let's look at some of the benefits for investments. So again, we have passive investment in proven talent. You don't have to go out and scout the trading talent. You don't have to make the decision of who you're going to invest into. You can invest into the Darwinex Labs index, into our hedge fund, and we do all of that for you. And remember, we are experts in our traders. We are experts in our technology and in our company. We know how to spot the top trading talent. Next is diversification. Again, going back to the capital dilution. I can just see a question from M. Ray. Is this webinar going to be recorded? It will be recorded and uploaded to both Darwinex and Darwinex Zero YouTube channels, and also both of our Twitter or X accounts as well. So don't worry if you have to dip out of the session at any given time, because you can rewatch it back. So I just wanted to get that in there in case you had to leave. The portfolio is already diversified. We're going to go over in a moment what we look for when we're including traders into the portfolio, but we're looking at traders who trade different assets. who hold trades for different amounts of time, you know, even just the amount of traders that the investment is going into. The great thing about having a portfolio is that even if one trader is underperforming, you might have two traders that are overperforming. So there's a bit of a balancing mechanism, which, you know, provides the investor with more diversified returns, because you're not putting all of your eggs into one basket of one trader and hoping that that trader continues to perform over an extended period of time. It's also an uncorrelated product, which, again, as I mentioned, it's a market directional unbiased product. I think that's the best way that I can phrase that. Probably not, but we're not reliant on specific market direction for the index to make money, and we're not also reliant on a specific asset to go up in value to make money. We'll go over some of the advancements that we've made shortly, but there's a big one that I think is relevant here, is that what we noticed from a specific period of drawdown in the past on the index was that we were too correlated with the NASDAQ going up. So what that means is we had too many traders exposed to long NASDAQ. Now, when NASDAQ had, you know, a 25 or 30% down month recently, of course, those traders or the group of traders as a whole saw a drawdown, and we were overexposed to that. So what we've done is we took that as a lesson, and we've put a mechanism in there to avoid that moving forward in future, ensuring that we are offering an uncorrelated product. There's daily liquidity so that you can buy and sell every day on the index. The statistics on the website update once per day as well. So, you know, don't go on there, you know, every hour of every single day expecting to see a different result. The statistics will update on a daily basis. And then finally, we are a regulated entity, and this is a regulated product. We also have fund protection. So any clients who come through our FCA entity, so UK clients, you will get up to £5 million insurance on your deposits if anything was to happen to your capital. And we also provide insurance of €100,000 for clients who come through our CNMV licensing, so our Spanish entity. Now, what's important to note is this insurance isn't to cover losses if a trader goes on a drawdown, but it's to cover losses, for example, if I'm not going to tempt fate, but if something bad was to happen to the company, just giving our users that extra bit of protection and that extra bit of a fail-safe safety comforting feature, if you will, so that you know that our interests are fully aligned. We want our investors to win. We want to provide the best infrastructure and the best software and tech to our traders and to our investors. Let's look at some of the benefits for traders. So it gives you the opportunity to attract additional capital. So as you already know, if you're a trader through Darwinex, you have multiple ways to attract capital and therefore earn performance fees. The index is no different. Any capital that goes into your Darwin or into your account through the index means that you will be earning 15% performance fees on any of that capital on a high watermark basis. So of course you need to be making money moving forward. You can't just take a performance fee and then keep making the performance fee on the same equity growth. You have to make a new high watermark high, of course. It gives you visibility without marketing on your side. You don't have to go out and network with investors. The whole point of Darwinex for a trader is to be able to do one thing and one thing only, which is trade. You don't have to network with investors. You don't have to go out and pitch yourself. You can just trade and the investors will come to you. There's a fairer distribution of AUM. So we've already covered this in terms of investors aren't diluting all of their capital into one Darwin. The distribution of capital is more fair and it is spread across more traders. And then the better performance that you provide to your Darwin, the more capital will come your way. Again, you will see momentarily when we go over the process, but we watch performance of our traders and we watch it over an extended period of time. If you continue to perform, your allocation in the index will grow. Now, this is really important because this is one of the biggest statements I think that Darwinex has ever made. The index strengthens our mission for multiple reasons. It's a meritocratic ecosystem, which, to be fair, Darwinex has always been. We reward based on performance. So the better you trade and over an extended period of time, the more rewards you will earn, the more capital you will manage, and therefore the more performance fees you should accrue. We're really trying to back the success of our traders. and not just a few traders. This is our opportunity to try and back more traders and to push more traders to becoming professional asset managers. There's no conflict of interest on our side. We actively invest our own capital into our traders as well. So we want to find the best trading talent that we can because we're investing our capital and investors' capital into you. We're proving that retail traders can win. Now, this is a big one. The statistics tell us that the success rate for retail trading is super, super low. However, we have a product that shows collectively, without doubt, over an extended period of time, retail traders can win. And for those traders that can win, we're here to back you with capital. End of. Darwinex wins with traders, not at their expense. It's the same point, really, but we actively make money when our traders perform. We're not in the business to trade against our traders. We're not in the business to see our traders fail. We want every single trader to build a track record, attract capital, earn performance fees, and scale with us because it is a mutually beneficial relationship. It benefits the trader, it benefits Darwinex, and it also benefits the investor. The investor's getting a fantastic product that they can put their capital in and know that they're protected. The trader can get more capital to trade with, therefore earning more money. And of course, Darwinex is the facilitator of this relationship. So of course, our business is built on that and we earn money from that too. So it benefits all three of us. If our traders are losing, it benefits nobody. Now, this is also some really important stuff because we're going to go into a few details about how we choose traders to go into the index and why we choose certain traders. So we're going to take a look at the selection criteria in a moment. But Javi, one of the founders of Darwinex, is also leading the Darwinex Labs department. He has a really simple method to choose the Darwins that get included in the index, and it's proven to work over the past 5 years that we've been running the portfolio. Now let's take a look at how we choose our Darwins. Okay, so every Darwin has the same process to get listed in the index, but there's kind of two methods to how this is done, or two sides to the page. So we have the first mechanical process that every trader goes through, which is basically checking on a monthly basis, is this trader in Darwinia Gold? If they're not in Darwinia Gold, then automatically you cannot be open to the index. So we're only taking traders who have achieved Darwinia Gold status. And the reason being for that is because we already have performance metrics at that point to classify this trader as a profitable trader over an extended period of time. So if you're unaware, to hit Darwinia Gold, you have to have a minimum track record of 8 months in length. You have to have hit certain performance objectives like a 20% return with a return to drawdown ratio of 2.5x, which would mean if you had a 25% return on your account, the maximum drawdown that you can have at that point is 10%. So 2.5x return to drawdown. Now, at the start of every month, what Javi does is he has a dashboard that shows all Darwins that have hit gold in that given month. And that's usually about 30 to 40 Darwins. He goes through them all one by one. And then if he finds any that fit his second criteria, which we'll go over in a moment, then we invest our own prop account capital to test that track record. And the reason that we do this, which is super important, is that it's kind of a tester for the index. So when I say our prop account capital, we have our own capital in Darwinex Labs, which is the training ground for the index. So we will provide a small investment into the Darwins that we see the potential to go into the index so that we can test their psychology and their behavior. What we're looking for here is when the trader sees that Darwinex Labs have invested capital into their strategy, does their behavior change or does their behavior stay the same? Now, it might seem a bit overkill, but realistically, if you're a trader who's never managed capital before and never managed capital on scale, and I'm talking about real AUM here, you don't know how you're going to feel when you see that first amount land in your account. Okay. And it can cause traders to do a huge, an endless list of different things. You know, it can cause them to get excited and overtrade. It can cause them to pull back and be a bit nervous because they know that there's actually something happening on the back end now. And so this is our test to the trader to go, we are now actively investing into you. Are you ready to step up and move into the index? Now, usually about 50% of the 30 to 40 Darwins that come through gold on any given month will gain that initial investment from Darwinex Labs to test the Darwins out. We also take a look at any Darwins in gold that have performed well last month. This is more for us to be able to see who's performing well, what allocation they currently have in the index, and is there any diversification that we need to do. For example, if we're underexposed to a Darwin that is picking up momentum and picking up steam, is there anything that we need to do to increase the allocated capital to that Darwin? And maybe it's a recycling of capital that we pull from an underperforming trader to an overperforming trader. Now, what we do is we filter all of the Darwins that are in Darwinex Labs and currently not in the Darwinex index, and we check for a return of 35 to 40% plus. And then we check those Darwins with a discretionary checking mechanism, and then we end up adding them to the index. And we roughly add 2 to 4 new Darwins to the index per month. What's interesting here is, which I think is crucial to note, is that we are actively looking at each trader as a trade itself. We're putting capital to a trader, betting on the fact that that trader is going to continue to perform. However, with that in mind, we have to protect and minimize our downside. So what we do when we allocate capital to a trader is we actually put a physical stop loss on that trader. So we put a stop loss of 8.5% on any given Darwin. And what we do is we give them the breathing room at that point to work out of drawdowns or to continue to perform. And what we'll do is we'll wait until the stop loss is hit. And then if the stop loss of that trader is hit, we then go on a secondary check. So we'll take a look at the characteristics of their Darwin. And if it is a good Darwin and it was just the fact that they've been through a period of poor performance, we can buy it again. So even if you're in the index and you go through a period of drawdown, as long as you're consistent over a long period of time and you have a track record that backs that up, don't worry, we will rebuy your Darwin again if your performance is good. Now, we categorize traders into many different categories that categorizes them on different variables. For example, assets that they trade, directional buyers, or a million different things that you can think of. And we set alerts so that what we know is if a trader's behavior changes suddenly, we are aware of that. Because we're categorizing traders, which I'll get into in a moment, we're categorizing traders within the index so that we know where our exposure is at and who it is through. Now, what we want to know is that exposure ever going to change? So if a trader has a track record of 5 years trading only the NASDAQ and then next week starts trading euro dollar, pound dollar, and dollar yen, we need to know this because we're actively investing capital into the trader based on their history of trading the NASDAQ. Now, what this tells us is that something's changed. Either they've changed their strategy, somebody else is trading the accounts, or they've just gone on tilt and started trading random assets. So what we do as a failsafe is we want to know if their behavior changes. It doesn't mean that we're going to pull them from the index at all, but what it will do is trigger a check. We'll trigger a check, which means that we then go and look at the Darwin and see if we can see any reason as to why the behavior has changed. What's interesting too is in the last 2 months, no Darwins have been removed from the index. So when I'm talking about all of these things like the stop loss or the checks that we have, these are fail safes on our side to maintain stability within the index. But actually, it's quite rare that a Darwin will be pulled from the index because to be in the index, you have to have a record of high performance, which means there's not a 0% chance of a large drawdown or for the trader's behavior to change, but there is a much, much lower performance because they're actively more invested in their own career. Interestingly enough, high volatility can affect or can increase the removal of or the removal amount of Darwins if more stop losses are hit. So, for example, going back to the NASDAQ example I spoke about earlier, where we saw that we were overexposed to the NASDAQ on the long side as an asset, if then all of a sudden volatility ramps up, for example, with Trump's tariffs or any event like this can cause significant market volatility and therefore can spike loads of traders to hit their stop losses. And so that would effectively mean that we would be removing more traders from the index as normal, but there's kind of a black swan event. It doesn't happen very often. And like I say, in the last 2 months, no Darwins have been removed. And the best evidence that the index works is that trader rotation is so low. Now, what I mean by that is I've kind of been talking about the fail safes thus far and what happens if things go wrong and how do we protect the index from drawdowns, etc. But actually, the trader rotation is really, really low, meaning that we don't often pull capital from one trader and give it to another, or take a trader out of the index, and put a new trader in. It doesn't happen very often. So these are all hypothetical or worst case scenarios that we've tried to put fail safes for to protect traders and investors long term. Now, let's take a look at this slide where we go through the strategy classification. So once you've passed the checks that are more mechanical, so is this trader in gold? Is their track record over 8 months? We then start to analyze you on a more personal level. On the screen, you can see there's various different checks that we go through, or various different metrics that we check on your account or on your Darwin. Going from the top, which is track record longevity, which is the most important, all the way down to risk management stability, which is important, but not as important as up the chain. I can just see a question from Chan asking if this is pre-recorded. It's not pre-recorded. This is live, so I'm here to answer any questions that you have. I can see your other question, which I'll come back to in a moment. However, we will be recording this session and uploading it to YouTube and X, so you can watch it back if needs be. But let's take a look and break these down one by one. So the most important thing for us when including a trader into the index is the length of their track record, for many different reasons. But one of the main reasons that this is so important is because we can have more confidence that the behavior and the statistics that we have will continue moving forward. If we have a track record for 2 months and it's produced 100% return, we don't know for the next 2 years, 5 years, 10 years, is that trader going to produce 100% return every 2 months? We don't know. Maybe they can, probably they can't, but we don't know because we just don't have enough data to say through this market cycle, through this market condition, through this period of time, through this month of the year, this trader continuously performs at the same level. We don't know. The more data we have on a trader, the more confidence we have in a trader. And whilst this is more of a discretionary decision, the longer your track record, generally, the more lenient we are on the other checks that we do. For example, the index drawdown correlation is low on this list. So if your track record is 10 years in length, we're going to put less weighting to the index drawdown correlation. However, if you've got a short track record, we're going to be checking all of the other options with a fine-tooth comb, making sure that we're protecting ourselves along the way. Now, the next two are generally measured together. So we look at these two in parallel with one another, which is the trader's loss aversion profile and the trend orientation. So although we measure them separately, we take a look at them joint because they show fairly similar tendencies. Okay. So we have trend following strategies or against the trends or market neutral trends. They all have different loss aversion profiles. For example, somebody who's trading against a trend will generally have a lower loss aversion profile because their winners are smaller than their losers or not as big as somebody who's following the trend. Now, this comes down to risk to reward of the trader and how well the traders can hold their winners and how fast they cut their losers, which is very dependent on any trader and any strategy. However, we can kind of gauge, is this trader a trend follower? Or is this trader going against a trend constantly? And we can tell this by if the trader is letting their winners run and their loss aversion profile is really, really high and scored really well, we know that that trader is generally positioning themselves within a trending market. which doesn't mean that they're a better trader. Let me caveat that right now. It doesn't mean that they're a better trader. However, for us, it's easier to allocate capital to those traders because they have a much higher loss aversion profile. So when we're looking at minimizing downside for investors and trying to protect capital whilst generating that return, we need to know that our traders can generally not lose a load of capital very, very fast. So, for example, a martingale trader, their loss aversion will always be really, really low because generally when they go into drawdown, it's a slippery slope and it can happen super, super fast, meaning that their losses are significantly larger than their wins. And again, kind of the velocity and the aggression of their drawdowns and their, well, I was going to say their loss aversion spike, but we have a chart that shows how far the trades go against you. The velocity of those spikes can give you a low loss aversion profile and therefore making you a higher risk investment. I can just see a couple of questions in the on the YouTube chat, so I'm just going to stop for a moment and read them. Damien, this isn't pre-recorded, it's live, but it will be available to watch after if you can't watch it live, if you have to dip in and out of the session, so don't worry. The rest of the questions I'm going to leave for a little while and I'll come back to them. Now, again, what we like to see is a good loss aversion score and a trend following strategy. Doesn't mean that if you don't fit that criteria, you're not going to be included. But again, just remember, we're kind of scoring a trader's overall record and fit for the index. Now, we have a metric that I'm not going to go too much into detail because it's quite advanced, but we have a metric called open strategy, which measures your effectiveness at opening trades and the price and the time that you open a position. If you have a low open score, it means generally that you are a trend follower. If you have a high open score, it means generally that you are a mean reversion trader. So this is just another way that we measure your trend orientation and your loss aversion profile just by taking a look at some of the custom metrics that we built at Darwinex. Now, if you have an open strategy below 3 and a loss aversion above 5, what that means is that you will get immediate allocation from Darwinex Labs. So not from the index, but from Darwinex Labs. It means that it's kind of like a bypass for the other checks where we go, okay, this trader has, they're in Darwinia Gold, so they've passed the initial checks. And then the two statistics that we would look at, the loss aversion and the open strategy, that are unique to each other. If you're scored correctly, you will get immediate allocation from Darwinex Labs. And again, that is the first rung in getting into the Darwinex index. Having a bad loss aversion and being counter trade, which is, again, martingale, will never be allocated in the index unless extraordinary circumstances arise, which I'll get onto in a moment because I actually have something interesting to go over after we've finished looking at the index. If any Darwin has a correlation above a certain X threshold with an asset like gold or NASDAQ, we also take that into account. So moving on to the next category on this list, which is the key asset class correlation exposure. So indices, gold, and crypto. Chan, you can use an expert advisor, of course. Expert advisors, discretionary trading, we don't mind. There's no preferential treatment when it comes to Darwinex. The key asset class correlation exposure. So going back to what I said about being overexposed to the NASDAQ, this is where, Damien, I ignored your question because it's not relevant yet. I will come back to it shortly. This is where we measure our exposure as an investment asset compared to underlying assets. So, for example, if our traders are heavily exposed to gold or NASDAQ, and our performance is based on that because we're too exposed to too many traders positioned in the same way, we need to know, because if that asset has a significant pullback or increased volatility, of course we're then going to see that in our portfolio. And the whole purpose of our portfolio is to remain diversified and to avoid things like this and to carve our own performance path out. What we don't want is somebody to look at the index and look at another asset and say, well, what's the point in me invest in here or invest in there, because the performance is exactly the same. We need the drawdowns to be uncorrelated so that they don't go into drawdown at the same time, so an investor can be diversified. But we also need the performance to be competitive. We need the performance to be overperforming when other assets are underperforming. Again, just for diversification for the investors. Now then we look at strategy, discipline, and consistency. And this is, again, this is more of a discretionary look into your approach as a trader. So we will take a look at the trader's history, okay, and understand, is the trader doing the same thing day in, day out, week in, week out, month in, month out, and so on and so forth? Or is there sudden spikes in behavior? And we can do this, a bunch of different ways. We can take a look at their value at risk. We can take a look at their trading history. And just so that we get an idea of this trader is doing the same thing. And, we can say with confidence that they're going to continue to do the same thing over the next 6 months, 12 months, 2 years, 5 years, 10 years. Again, that is a discretionary decision. But as long as you're a consistent trader, and by consistent, I don't necessarily mean performance. I just mean you're doing the same thing and you're not strategy hopping or getting too affected by emotions, which then relays into your trading. This should never be an issue. Next is strategy execution type. So coming back to Chan's question, meaning you can't use an expert advisor, you absolutely can. It doesn't matter whether you trade with a discretionary approach or an algorithmic approach. The only difference is that we have a different approach to both traders, because we know realistically algorithms are going to be more stable in their approach. It's going to do the same thing again and again and again, unless there's human interference, of course. Whereas with a discretionary trader, we have to understand their approach a little bit more, in terms of we need to understand their psychology, their behavior. And the only way that we can do that is by looking at their metrics and looking at their trade history. So it's not that one is favored over another one. It's just that we have to measure cross correlation between traders. So if you've got algorithmic traders, are they doing the same thing? If you have discretionary traders, are they doing the same thing? And then we have to judge their behavior slightly differently. Again, discretionary traders are probably going to have more sporadic behavior, even if they are the most consistent person in the world. Now, we're moving on to lower down the list now. So we have the index drawdown correlation. So what we don't want is, or not what we don't want, but what we want to try and avoid is where historically the index has underperformed and had periods of drawdown. We don't want to add loads of traders whose drawdown was also during that period of time, because what we're doing essentially is looking at our worst periods of time and saying we're going to add more correlated traders in who generally underperform at the same time, leading us to higher exposure the next time the market goes through that same cycle or through that same condition. So it's not that you won't get allocated in the index. It's just that you might start with a smaller allocation and it gets scaled over time whilst your behavior adjusts, and we get a little bit more statistics and more data about you as a trader, just to ensure that our drawdowns are slightly uncorrelated. Again, going back up the list, if you have a long track record, the less important this is going to be. If you have an 8-month track record and your drawdown is 100% correlated with the index, then of course it's going to weigh more in that decision-making process, whether to include that Darwin in the index. And then last is risk management stability. So we basically just look at your value at risk at this point. Is it stable? Is it consistent? Or is it a little bit more sporadic, and does it change and chop over time? We don't mind, for example, it floating between 3 to 9 and, going from 3 up to 9, back down to 3. That's fine, as long as it's consistent over a period of time. But what we don't want to see is 3, 3, 3, 40, then back down to 3, 3, 3, 3, 40. And these huge spikes in value at risk, because again, going back to trader behavior, that shows us that you're not doing the same thing again and again and again, which, gives us a lower confidence score in you as a trader, because we can't accurately say in 2 months, 6 months, 12 months time, this trader is also going to be having these spikes of risk management. We don't know what the trader is doing in that specific time, and therefore we can't accurately say moving forward, is the same going to happen again? Now, for the index, the track record is now live on the website, so you can go to darwinex.com/Darwin/INDX, and you'll be able to load the track record, where you'll see the returns and statistics of the account. So you can see here on this slide, I have a screenshot. I think at the moment the index is slightly higher. So let me load up the actual website. I think you should be able to see this now. The guys in Discord, I'm going to change my screen. So the guys in Discord, you should be able to see it too now. So we're currently sat at 222.3% return with a maximum drawdown of 12.27%. This is updated once per day, so you will see a change overnight. Jesus Perez, welcome. Congrats for index. What are the main reasons for not disclosing the specific Darwins and their respective weights included in the index? In terms of, you mean publicly coming out and saying X Darwin has X amount of capital from the index? I'm presuming that's what you mean right now. And I guess it doesn't really matter to a degree because that will change over time. So based on performance, again, the allocations in the index may change. So it would, require a need for us to constantly update that figure. However, if you're looking at an individual Darwin, you can see their AUM, and you should be able to see a badge saying that they are invested in the index. If you can't, that should be something that's coming soon. Oh, didn't realize there was a link on there. Otherwise, I would have just opened that up. Okay, now I can't skip the slide. So here you can see a monthly return breakdown. So the track record is since mid-2020, so just over 5 years in length. We have done 22% in 2020, 51% in 2021, 21% in 2022, 16.92% in 23, 16.83% in 24, and currently up 3.8% in 25, leading a total return of, which is slightly higher now, again, 222% over the 5-year period. Again, it's a market directional neutral bias asset, if those string of words make any sense, meaning that we don't rely on a specific market condition, or we don't rely on the market to be going up over time as the S&P would, for example. As always, we have to put a risk disclaimer here. Past performance is not a reliable indicator of future results. Capital is, of course, at risk, and these are gross returns before deducting 1.2% management fees per annum and 20% performance fees. So if you wanted to invest into the index, you can do that two ways. You can invest via Darwinex, and this is for deposits from 10,000 euros to 100,000 euros, or you can invest via certificate. So for deposits over 100,000 euros, you can purchase via a certificate, which you would do by reaching out to us and speaking to us at info@darwinex.com, and we can guide you through that process. The cost is a 20% performance fee on any profits made on a high watermark basis, and 1.2% management fee per annum for the hedge fund. So now I want to go into a session for Ask Me Anything. So I can see there's quite a few questions coming through on YouTube, which I'm going to go over now. But before we do that, there's a few interesting things that I wanted to cover before we jump into the questions. So we are a team that are constantly analyzing what we do and looking to improve. And that's no different when it comes to the index. I've already alluded to, we've learned from some of the past mistakes or some of the past things that we've noticed, for example, being overexposed to a specific asset. And with this, we put 3 specific layers of protection. So number 1, we learned at a period of time that we were overweight to martingale strategies in the index. So what we did is we made a group of traders that all use martingale strategies. And what we do is we measure every hour the value at risk of these Darwins together collectively as a group. And if it raises above our limit, we close the exposure to these traders in the index, and then we will rebuy when their value at risk drops below a certain threshold. With that being said, that means that if there's ever a martingale spiral and somebody starts to lose a significant amount of capital, the index doesn't do that. We cut the loss early and, again, avoid that martingale spiral, which too many people have been burnt from in the past. Number 2, we have... we basically group, again, Darwins that are correlated with a specific asset. So, again, going back to my earlier example with the NASDAQ or the NQ, we take a look at the correlation within the past 1 month. And if the value at risk of that group increases again, we close and we rebuy at a better level, just so that we're closing exposure, so that we're not overly exposed to, again, a market directional asset or a movement. Then number 3, if the index VAR ever doubles, we close a portion of every trader to reduce value at risk overall for the portfolio. But this has never happened before, and this is kind of our final fail safe, where if we say things are, risk is increasing, our exposure has increased, in fact our exposure has doubled, we need to do something, we need to step in, and we would close a certain portion of every single trade that we're exposed to for a period of time until our value at risk decreases again. But like I say, this has never happened before in the history of the index. It's just there so that we know for sure, if things were to happen, if volatility was to pick up and we were getting affected by it, there's something that we can do to counteract that. We also have a Darwin that we set up to not hedge against martingale's strategies, but as, again, a little bit of a fail-safe mechanism if our exposure gets too large within martingales. So the Darwin is DWHV. I'm going to load it up now. And I think this is really interesting, and it has allocation within the index. So the index is exposed to this for the whole purpose of this is kind of like a hedge to martingale. So what this does is the traders who are included, or the top 100 martingale traders based on their quote in Darwinex, we wait until the group value at risk spikes above a certain level. If it does, we then take that trade. We then trade with the martingale. So if we're too exposed to NASDAQ longs, for example, and the martingales are getting smoked, we would then trade NASDAQ short. So it's a very, very, very rare occurrence that this would ever take a position, because the threshold is so high for the martingales to hit that value at risk threshold. If it happens, and when it happens, our system will automatically take a trade against that position to hedge the risk of that. You can see it's pretty flat usually over an extended period of time. It doesn't take too many trades. There's a 2-year period here where it didn't take a single trade at all. But then when it does, it makes about 30% on each move. So I think this is a 30% move here, about 30% move, maybe a 20% move here, and the same again. Now, what that's telling you at that period of time, there's a whole load of martingale traders that are significantly offside, and the market is just steaming against them day in, day out. And what we do is we take that as a signal to get in the market, because the move is likely not over, and we're kind of playing with the value at risk at that point. But the purpose of this is we've invested in this to hedge against our exposure to martingales at any given point when that happens. So we have about 5% of our investment portfolio in this to profit and hedge the drawdown from there. So I think that's really interesting. The Darwin is DWHV. If you want to take a look, you can see there's investment in there from us. But it's not a normal Darwin. That is, you can see it's by Darwinex Labs. That is as, and it serves a purpose outside of just trading and building a track record. So back to the Ask Me Anything. I'm going to start going through questions now. For the guys in Discord, like I said earlier, the chat function isn't showing for me for some reason, and I don't know why that is. So if you want to ask a question and you're in Discord, please just pop it in the chat. The chat English, I'm just checking if anybody... There we go. I've got it to work. For some reason, it wasn't showing me, but it's showing me now. So if you do have any questions in the Discord, please just pop it into the chat box. You should be able to open it in the top right hand side of your screen. That's where it wasn't showing for me, but I've managed to get it open now. So please put any questions that you have in there, and I will review them one by one. We also have a few questions on YouTube. Damien, so in another word, EA is not allowed since human interaction is still needed. Nope. EAs are allowed 100%. We don't discriminate. EAs or manual traders. In regards to your friend, I highly doubt that's true. We are regulated by the CNMV, FCA, and FSA. So if there's an issue, please get in touch with us through info@darwinex.com or info@darwinex0.com, or DM me on any social media platforms or on Discord. But please don't post things like that, because it's absolutely not true. Scrolling up to the top. So I know what fees and costs are associated. So management fee, performance fee, frequency calculation, high watermark. Can you provide the link to documentation about this? So we've already covered the fees and costs associated. which is a 20% performance fee and a 1.2% annual management fee. The frequency is quarterly. The calculation is on high watermark. Yep, you pretty much answered your own question there. And can I provide a link to documentation about this? I mean, it's all available on our website. So I will grab a link from our website, if you bear with me for a moment, and send it in the group. So if we go to darwinex.com, investing strategies, you can click on Darwinex Index, and then you can either get in touch with us here and put your email, send us an email, and we will get in touch with you, or you can see the information over here. So you can see all the minimum investments, the fees, and everything that you get with being a client at Darwinex. London Dale has asked, can you please let me know the returns taking into consideration the fees, i.e. what the net returns after management fees and performance fees? I don't have that information because we show everything pre-fees. So I don't actually have the information to show you on that, unfortunately. But of course, it's a 1.2% management fee and 20% performance fee. So you can sort of work it out to within a certain degree of accuracy. But like I say, we don't check it net fees, so I don't have those returns in kind of a table to be able to show you. A sure thing said, I'm based in the UK. Is there any advantage, disadvantage choosing GBP as my base currency compared to USD or euros regarding deposit and withdrawal fees, currency conversion, or trading conditions under the index? There's no difference. There's no advantage, disadvantage. You will probably pay less fees for transfers, of course, because you're not going to have to transfer from GBP to USD. So sometimes your bank can charge you that. So if you're opening an account, it would make sense to open it in GBP, but it's completely down to you. You're not going to be penalized for choosing a specific currency, and it's definitely not going to affect your trading conditions under the index. We wouldn't penalize you for that, so don't worry about that. Damien also said, is Darwinex available in Malaysia? Yes, we have a couple of fantastic traders from Malaysia who trade with Darwinex Zero. Hemant said, does the index value reflect net performance after deducting management fees? Also, how many Darwins are typically included in the index at any given time? Could you please share minimum and maximum range? Yeah, so okay, going back to London Dale's question is we show everything pre-fees, okay? So everything that you see on Darwinex.com or on the index page is all pre-fees. And then how many Darwins are typically included? At the moment, I think we're roughly between 100 and 150. But again, like I say, we're adding 2 to 4 Darwins per month. I myself don't know the exact number right now. But I know it's between that range. But as we grow and as we scale the index and as more great traders come through Darwinex, of course, we will add more traders to the index and it will naturally and organically grow over time. Andres said, do you allocate capital to new strategies based regression residuals not explained by existing index constituent strategies? I'm not 100% sure what you mean by that. If you're still watching the session, could you please explain what you mean by that? I would really appreciate it. London Dale also said, what is the total number of Darwins in the index? I feel like London Dale is also on the YouTube because these are the same questions. Not sure if you've covered them before. We literally just did. Is the weight to Darwin based on performance or Darwin of Darwin, or is it equally weighted? It's not equally weighted. It's based basically on a discretionary decision. You know, when I was going through the list of things that we look for, of course, all of those will take part or be a part of the decision making of how much capital gets allocated to any given trader at any given time. Sammy, welcome. It's been a while since I've seen you in one of the sessions. Sammy said, I've just joined, so sorry if this was already answered, but what is the criteria for our Darwin to be included in the index? Let me roll it back for you, Sammy. So firstly, you have to be in Darwinia Gold. It's been a while. It has been a while. Firstly, you have to even be considered, you have to be in Darwinia Gold. So you have to have hit the performance objectives and track record length of 8 months to even be considered to be part of the index. But then we check these different factors on your track record. So as you can see on the screen right now, just going to check in the Discord that you can see the correct screen. You can indeed. Fantastic. So at the top of this screen where you can see track record longevity, that is the most important out of all of these factors, all the way down to the bottom, which is risk management stability, which is the lowest weighted factor. Now, there's a few nuances. So I'll kind of blast through it now, but I would recommend, Sammy, going back and watching this segment of the session on YouTube or X, where I actually cover this in full detail, because there's a lot to go through here. But essentially, at face value, the higher up on this list that the item is, the more important it is in the decision to list your Darwin on the index. For example, your track record longevity, so the length of record. If the record is longer, you would get a little bit more leeway with other things. For example, the drawdown correlation with the index. If your drawdown on your Darwin is highly correlated with the index drawdown, and you have an 8-month track record, that might cause a bit of concern for us to include that Darwin in the index, because we're saying we don't have enough data on this person or on this trader to know that their performance is going to stay stable for the next few years, and their drawdown is highly correlated to what we've seen in the index. So it's kind of like we're adding more risk to our books without knowing the positive upside. However, if you have a 5-year track record or a 10-year track record, and we know what your maximum drawdowns are like, we know your recovery rate, and we know all this information about you, then we'll put less weighting on the fact that your Darwin tends to go in drawdown at the same time as the index, for example. So that's just a brief overview of it. Of course, there's lots of different things here that we measure and that we take a look at, and ultimately it does come down to a discretionary decision by Javi and the Darwinex Labs team whether to include a Darwin in the index or not. But that's the basic overview. So I hope that helps, Sammy, and I would definitely recommend going back and watching the certain part of this session where we break this down one by one, because I went through all of them on an individual basis. We have a question from YouTube. The index track record shown from 2020 to 2025. Is this performance based on a real live account managed with actual money by the Darwinex team since 2020, or is it a backtest? Great question. We have been running it on a live account, or at least Javi and the Darwinex Labs team have been running it on a live account since 2020. Didn't know that it was going to end up in being our hedge fund, but this is basically, we've been making money from the portfolio from our traders and actively investing into our traders for 5 years. Correct. Bruno said, can you repeat the cost of the index inside Darwinex again, please? Yes, the cost of the index. So I'm presuming you mean in fees to be in the index is 20% performance fee and a 1.2% management fee. Sammy said, thank you very much, Kieran. I appreciate it, dude. You're my pleasure. I will definitely watch the replay. This is very exciting news. Yeah, 100%. This is like the next phase for Darwinex, right? It's super, super exciting for me because it's, you know, spent so much time building the business and seeing what it's become to now entering the new phase and being able to give traders that next level of, we are trying to back you with as much as we can and bring in as much capital to scale the business and to scale our traders. So it's super, super exciting, and I'm excited to see where we are in 6 months, 12 months, 5 years, 10 years. Chan, how much can I trust these review? I'm not sure what reviews you're on about. Strive Trader, hello dude, hope you're all good. First of all, I was very pleased that my Darwin was included in the index. Oh, congratulations. Many thanks for that. My question, why was the index limited to $3 million in investor capital? Okay, so there's a period of time where we've capped it at 3 million whilst we launch. There isn't a hard cap at 3 million, so we will bring more than 3 million over time. There's just a period of time where we're adjusting and making sure everything works correctly as a company before we scale. The worst thing would be if we let in 10 million, 50 million, 100 million, and you know, we weren't prepared for it. So that's the only reason. But over time, that 3 million cap will be lifted. A Sure Thing said, can you invest into the index using leverage as with other Darwins? Unfortunately, you can't. We don't allow the use of leverage as you would with a singular Darwin, purely because it's a portfolio that's managed by us. So we're doing it without offering the investor additional leverage. Again, this is an investment product that we've created, and taking the decision making away from the investors. Of course, we can't then ask them, to leverage up on that side of things. London Dale, would there be any consideration to reduce the minimum investment from 10K? Great question. I can't give you the answer on that, unfortunately. Maybe shoot me a message and I'll have a conversation, but I can't promise anything when it comes to that. Unfortunately, it's set at 10K for a reason, but I'm happy to share feedback and have a conversation on your behalf. Emre, can the investor see which Darwins are included in the index? Nope. It's we don't give them. I mean, the plan is to give Darwins a badge to show who's in the index, but an investor wouldn't be able to see at any given time that X, Y, and Z has been allocated X amount of capital. Andres said, okay, so this is going back to the allocate capitals based on regression. I mean that if a strategy is not unique, its returns will be easily explained by other strategies within the index. The more unique a strategy is, you will have a positive residual alpha. Let me go back to your original. So you're basically asking, we don't just pile capital into highly correlated strategies. I'm guessing that's what your question is asking, and we're constantly looking for new alpha, which is correct. I mean, the whole point is giving enough traders capital to of course perform and to trade and to earn. However, we have to limit our drawdown and our exposure to certain assets, certain volatilities, like so many different things. So we group traders based on different variables, again, like assets, how long they hold positions, and all of these different things, and we would allocate capital accordingly to that. Most strategies, however, are unique, at least to a certain degree. It's very rare that you'll see a complete one-for-one, especially at that level, of trader when they've passed into Darwin of Gold and then got into the index. It's very, very rare that the trader wouldn't be unique. London Dale said, what is the current AUM of index and how much of this AUM is owned by Darwinex Labs versus external investors? So the AUM by Darwinex Labs is private. That's, of course, our company equity behind the scenes. And then we have, you can see the AUM of the index on the front end if you load it up. It's currently 500,000. So we launched 2 days ago. There's currently $512,000 in the index. But remember, this updates once per day. So the capital that's been invested today, for example, won't show up on here. It will be rolled over overnight, and then this will show up. You can see up here, daily quote update. So this will update tonight at 10:01. So on rollover, you will see the updated statistics. But our job as a company is to, scale that as high as we possibly can. Again, benefiting everybody, benefiting Darwinex. Of course, we grow as a business and we make more money. We bring more money to our traders to do the same, and we're giving investors a fantastic product. Haman, is there a minimum threshold for the number of Darwins in the index? There's no minimum threshold, but of course, we want to make sure that we're equally diversified between a certain number of Darwins. How is the performance impacted when the index reaches the minimum? Like I say, there is no minimum, and luckily we have enough good traders that we won't ever drop a significant amount of Darwins and reach kind of a minimum of how many Darwins are in there. Realistically, over time, the index should grow from an AUM perspective, but also from an exposure perspective. So how many Darwins that we allocate capital to. Aino said, please confirm these fees are annual fees. That's correct, that they are annual fees. Rain asked, want to ask if grid or martingale Darwins are also included inside the index or don't. If they are included, so will others with no loss aversion as well. Okay, fantastic question. And I did kind of cover this earlier. So martingale strategies is basically a no. However, there's certain unique circumstances where there are martingale traders in the index, but what we've done is we group them together and we measure their value at risk as a group. If their value at risk surpasses a certain level or a certain threshold, what we would do is we would then close out their position and ensure that we're reducing the value at risk back down to normal levels. So yes, they would be included. However, the behavior of their trades would be slightly different because we would be actively monitoring their value at risk and their exposure. The Rango, welcome, dude. How's things? It's been a while. I'm late to the party, I see, but I still want to say that this index is a fantastic project. I'm already seeing the seed on my Darwin. Also, if I'm not performing very well in this period. Yeah, I mean, I think you were probably one of the first zero Darwins to receive capital from Darwinex Labs, if I'm not mistaken. And well deserved. You know, your record is 2 years plus in length, if I'm not mistaken, maybe 2 years and 2 months. And yet you're in a drawdown period. It's natural, happens, but you've proven over an extended period of time that you have positive alpha and a positive expected value. So it's just time to recover and time to scale. I'm glad you could make it though, dude. I mean, 2 years and Darwinex Labs was one of my first investors. Fantastic to see. Herman said, additionally, at what point do you decide to stop executing new trades based on this condition? Based on the condition of having a minimum threshold for the number of Darwins. Again, there is no minimum, so that wouldn't be an issue. The exposure would just be recalculated between the Darwins, but there is no minimum threshold. So I guess that question kind of not irrelevant, but it doesn't matter because you're asking based on a minimum threshold. Andres asked a couple more questions. Thank you guys for all of these questions, by the way. These sessions, if it wasn't for you lot, I'd just be somebody talking to a camera. So I massively appreciate whenever somebody joins the session and asks a question. So please keep them coming. Alternatively, if again, if you're dipping in and out of the session, I'm always around to have a chat. So if you ever want to jump on a call or want my email address or message me on Discord, I'm always around to have a chat. So if you think of anything post this session, please feel free to contact me and we can have a chat. So Andrew said, not explained by the factors, other strategies within the index. Such allocation allocated more to radically different strategies and less to conventional strategies that you already have at. So the difference in strategy is less important. I mean, I think I'm reading your question correctly. The difference in strategy is less important to how much allocation you will receive from the index. It's more about the factors that are actually still on the screen now. So how long we have on your system, how long we can measure your data, the things like your loss aversion, like the correlation to specific assets, the correlation to the drawdown of the index. I mean, if you're saying that, well, you're saying compared to a different sort of strategy, but it would be based on these different factors. The more confidence that we have in the strategy based on the length of the strategy, and then the confidence that we have based on the metrics, i.e. the loss aversion, the drawdown correlation, all of that sort of stuff, that's how much capital we would allocate. But I can't give a specific amount based on these metrics because, again, it is all a discretionary decision. Andres also asked, thank you for all the questions, Andres. I think you've asked like 5, so fantastic. You're my favorite person. What is the AUM currently allocated to the index? Have an estimate of index AUM capacity. I don't know the capacity off the top of my head, so I wouldn't want to misquote and give you guys false information, but at the moment there's about $500,000. It's been live for 2 days, and then we have our own capital in there as well. So yeah, but again, with the capacity, it would change over time with the more Darwins that we get in and the more diversified the approach of the Darwins. Thank you, Ignacio. Ignacio just said capacity is around $50 million. Fantastic. But again, subject to growth. If the index keeps growing over time and we add more Darwins, of course, there's more exposure there. Rain asked, are the Darwins selected based on their winning cycle? What happens if they go into a losing cycle after selection? They're not based on their winning cycle. It's all based on, again, these factors on the screen. So your performance over an extended period of time. If you go into a losing cycle, that's absolutely fine. right? I'm not sure if you was in this session when I spoke about this, but every trader that gets entered into the index has a stop loss on them. And what we mean by that is we enforce a stop loss of 8.5%. So if we brought in a trader and then they lost 8.5%, then yes, they would hit stop loss. They would be temporarily removed from the index. But what we would do then is that would trigger a check. We would take a look at their Darwin. We would check all of the characteristics and all of the metrics that we have. So again, things like track record length, loss aversion profile, the list goes on. And we would go, okay, was this just a blip in performance? Is it as bad as they've seen before? For example, if a trader has a 10-year track record with a max drawdown of 10%, it's unfair for us to remove their allocation completely and never reconsider them again, because we know that trader's max drawdown is worse than the 8.5% stop loss that we put in place. However, it's just to mitigate our downside. So if the trader is still good enough and credible enough, we will rebuy their Darwin and they will be re-entered back into the index. So your question about going into a losing cycle, it doesn't matter. We're in the industry. We know that, traders aren't going to win every single day. That's the whole purpose of having a portfolio, is that if a trader does go through a losing cycle, it doesn't really affect the end user or the investor, because they still have exposure to 100 plus, 150 plus other Darwins that might be in a winning cycle. So it kind of balances it out. Emre, basic question. Can you please show how to look for index on Trader's dashboard? Yeah, of course I can. Of course I can. So let's go Darwinex. All you do, darwinex.com/Darwin. You'll have to be logged in for this, so you'll need an account with darwinex.com. You can log in with your Darwinex 0 username and password if you are accessing from Darwinex 0. But just put darwinex.com/Darwin/INDX. This is the quickest way to get to it, by the way. You can obviously go through the website and search it through there. This is the quickest way to load it up. And you'll be able to see the live statistics. Again, updates on a daily basis. Thank you, Ignacio. I appreciate that. The link is in the Discord. I will also post a link. For you guys who are watching on YouTube. There we go. So you can bookmark that and take a look and have a look and, provide us with some feedback. Let us know what you think. Andres, again, you mentioned martingale traders. Do you identify them by how they scale up positions during drawdown, or also segmenting them by the strategy mean reversion? Okay, fantastic question. So martingale traders have very specific behavior traits that we can view from things like their value at risk and their exposure. I'm sure you know how martingale systems work, so it's very easy to see how that translates, how their behavior and their patterns as a trader translates into things like their value at risk. For example, let's say the trader has 10 winning positions in a row that's winning small amounts each time, and then all of a sudden there's a big losing trade and the trader ends up pyramiding into that position or gridding into that position 5, 6, 7, 8, 9, 10 times. You will see a huge spike in their value at risk that then will drop straight back down to where they were pre drawdown trade. So that's kind of like an easy way to spot a martingale trader. You can also spot them usually by their equity curve. When their equity curve is steadily rising, then there's a big dip and a big recovery. But of course, you can never say for sure unless you look at somebody's trades. And even then, I mean, you can pretty much gauge whether somebody's a martingale trader, if they're trading one direction, and their position sizing is changing with every single trade that they take. But like I say, you kind of don't even have to do that most of the times. Most of the times you can see a martingale trader just by looking at their equity curve or their value at risk, or even their loss aversion. Their loss aversion statistics are going to be like crazy. You'll see tiny green bars. So again, if we just, let's just load up, just so I can show you what I'm talking about. If we take a look at a loss aversion chart. So what you would see on here with a martingale system is that the green bars would be very, very low. This isn't a martingale account, by the way. I'm just bringing this up just so that you can see the chart. But you probably see like really small green bars, which is how far the trades go for you in your favor. And then the red bars is how far trades go against you. Okay, so what you'll see is there'll be consistent sizing on both sides, and then all of a sudden a massive red candle. And usually this chart gets really out of proportion, and all you can see is big red candles. That is the top way that I spot. That's the main way that I spot a martingale trader, is just by looking at their loss aversion chart. Pair that with a high value at risk, or sorry, not high value at risk, with a sporadic and non-consistent value at risk, then yeah, you can pretty much guarantee that they're a martingale trader. But what we do is we segment them together, like you say. So we put them together, we measure their value risk as a group, because generally it doesn't matter what assets that you're trading. Martingale traders are fantastic within, you know, specific ranges, but as soon as a market trends, and you know, you might have one specific asset that's trending harder than the others, but generally volatility is spread amongst the whole market, right? So you might have martingalers in gold, martingalers in Aussie New Zealand, martingalers in the Nasdaq. Generally, if market volatility picks up, you're going to see the whole market affected by that. So we measure their group value at risk, and then we'll cut the positions as a whole across those. Strive Trader, are the investors of the actively managed certificate ISIN, I'm not going to bother saying that number, also including the investor volume on the index website? Yes, they are. The AUM that you see is the full AUM. Once again, guys, thank you for all these questions. And if you've had to be dipping in and out of the session, or you joined halfway through, don't worry. The whole session has been recorded. I know it's live now, but as soon as we close down the session, it will be posted on X and YouTube automatically, so you can go back and watch the parts of the session that you didn't see or that you missed. Daniel, will investors still be able to invest in a Darwin as it has been the case, or will they have to go directly to the index? Fantastic question. Nothing will change. You can still invest into an individual Darwin, of course. The index is kind of an additional proposition or an additional product for investors. Again, eliminating the decision making that an investor would have to make, eliminating the management that an investor would have to make. However, as of right now, whether it changes years down the line, I don't know. But as of right now, you will still be able to invest into a specific Darwin. Because the thing is, you know, there still are active investors. The index is tailored more towards passive investors, like somebody who wants to park up their capital, have it managed for them, and not have to worry about it. Whereas, you know, if you're creating a portfolio yourself, of course, you're more than welcome to do that. But of course, it's going to take time. It's going to take effort. It's going to take mental clarity and a lot of decision making. But we won't at the moment. You still have the ability to do that. Ignacio, you rock, Kieran. I appreciate that, dude. I kind of feel lonely here without you up presenting with me. But it's great to see you here for the whole session, dude. I appreciate it. Right, I think Andres, thank you very much. It's an absolute pleasure. I hope you have a fantastic day. And thank you very much for asking all the questions. Again, like I say, I'm just some guy speaking to a camera, you know, if people don't join these sessions and ask questions. So I very much thank you for coming on and asking some questions. And also, I can tell that you're quite knowledgeable about the industry. Your questions are direct and good quality. So props to you. Rain, investing in index and investing on Darwin's will both about the same fees, or index has a greater fee? Same fees, same structure. Yeah. Yeah, so the whole infrastructure is basically the same for an investor. So there's no differential in fees or process or anything like that, unless of course you're investing with a large amount. Ray, what is the minimum amount for investors to invest? At the moment, it's 10,000 euros. I think it's 10,000 euros, pounds, or dollars, like whichever your base currency would be. Whether that changes in the future, I have no idea. But for now, that's the amount that we've decided on. Again, mainly because we're looking to attract semi-professional traders, semi-professional investors who we can manage their portfolio for them. Yes, that's correct. Will the certificate charge the same fees? The fees will be the same. no matter what you do. We're just giving investors different methods to be able to access the product. But yes, there is no benefit from accessing one way over another, or there's no ways to kind of eliminate a certain fee. I'll give you guys a few more minutes. I just want to make sure that I've answered all of your questions, but please just remember, like, after the session, if you do think of any more questions, like, please don't hesitate to get in touch. I'll pop my email address into the chat so that you can feel free to email me. If you're in the Discord, the best place to contact me is, of course, via Discord. I'm always in there, so you can just reach out to me. Just send me a message. If I don't respond, just ping me in the Darwinex English chat, and I'll be able to see it easier, because sometimes my direct messages get stacked up, and I try and go through them once per day, but sometimes I might have 30 or 40 unread messages. So just give me a ping. Don't ever feel sort of hesitant to reach out, or ping me in the chat and tell me to check my direct messages. Right, I've just sent my email address in so that everybody should have it if you need it. So feel free to shoot me any questions. Rain, I can see another question. How is the slippage on index? What happens if more investors join later? What is the plan when slippage starts to increase? So fantastic question. And again, nothing really changes based on how we've done things previously, right? So we measure every strategy's alpha cap or max investment. But to do that, we look at the toxicity flow of their orders, and then we simulate how much slippage that trader could take before there's a divergence in how many pips an investor would make, right? So we simulate that, and we say if an investor was getting X amount of slippage, their return amongst the same time would be X, and then we would cut off the strategy at the point that they reach their alpha cap. So because we're basically investing into all of the Darwins under one portfolio, it kind of remains the same, right? So all of the trades are still getting executed the way that they would. So there's kind of no difference between slippage on index and slippage on investing into a Darwin, but it is and always has been managed by us. So we will be closing Darwins if they hit their max investment. At the max investment, that would be where there's too much volume to go through the market at any given time, i.e. there's not enough liquidity, or the amount of volume that gets pushed into the market makes them get slipped, and therefore returns a lower percentage per trade. So we have been managing that for the past few years. Emre, there's only Darwinex Zero Discord, right? That's correct. We do only have a Discord for Darwinex Zero. Yeah. I mean, is there a Discord group for Darwinex? As of right now, no. I mean, if there's a demand for it, then there's a conversation we could have. But I don't know if there would be. I mean, please let me know. Like, any feedback that you can give is massively appreciated from myself and us as a company. So if that's something that people want, of course, it's a discussion that we can have. The only thing I will say is there's like 10,500 members in our Darwinex Zero Discord server. And we have it split via English, Spanish, French, and Italian. So there's already kind of a lot of momentum in there. So even if you're a trader from Darwinex, which we do have a lot of traders and investors from Darwinex in the Discord as well, it's probably a better place to join and interact anyway, because that's where all the team are, it's where all the community are. And like I say, we do already have traders and investors from Darwinex. I know, logically, the performance of the index will not be reduced by a VAR adjustment by the risk management engine, correct? What do you mean by that? Do you mean a VAR adjustment by the risk engine at granular level, on the Darwin level, or as a whole as the index? Rain, how about a Discord group for Darwinia Gold? That's a great question. Again, that's something that we could do. It's a conversation we could have. Alternatively, we can have a channel for Darwinia Gold members. I think that's something that I think that in the Spanish section of the Discord, they have what they call the Vault, which is where verified Darwins, so people who've reached out to us and proven that they own a Darwin, and gold traders can have access to, whereas everybody else can spectate, but won't be able to speak in there. I mean, we can do something like that as well for English native speakers too. Or we can run a poll and see if gold traders would like their own channel. I mean, I'm always open to ideas, right? What I want from the community is for you guys to feel valued on an individual basis and as a community. So whatever I can do to make you guys feel that way and to give you guys the best experience at Darwinex is, you know, I will listen to any sort of feedback that I can. Bruno, is the Discord free? Yeah, 100% free. I mean, just for investors, a Discord for free. We don't have a Discord for investors. We just have the Darwinex Zero Discord. But we do have investors and traders from Darwinex in that group. I know. I mean, in addition to the individual Darwins at the index level. Okay, I see what you mean. Actually, no, I don't. So you're asking if the VAR adjustment at index level. So I'm presuming what you mean is when I was talking about things like martingale traders and we measure their value at risk as a group and would cut their exposure, for example, if their value at risk was to increase past the threshold. Are you asking if that would then affect the physical Darwin, like the underlying Darwin? If so, if that's what you mean, then no, it's only at index level. I'm sure that's what you mean, but please correct me if I'm wrong. Daniel, yes, I just went through this, so sorry if I didn't make it clear. Will investors continue to have the option of investing in specific Darwins independently, or all investor capital go through the index? You will still have the option to invest into specific Darwins, of course. The whole point of the index is to eliminate the decision making that an investor, you know, for a passive investor at least, eliminate the decision making that they would have to make, eliminate the management that they would have to do, and the research that they would have to do on the specific Darwins, and also to give them a more diversified approach. Of course, like every investor has their own risk appetite and has their own goals as an investor. But generally with the index, we're providing you with a more diversified approach, not putting your eggs in one basket with a specific trader or a specific strategy. So for example, you might have a strategy that has a stagnation period of 6 months, 12 months, 2 years. You just don't know, right? Whereas the index, the way it's designed as a portfolio is that the stagnation period should be much, much lower than, you know, a single strategy. Because it's all risk adjusted, the maximum drawdown and the performance might be akin to investing into a single strategy. Might be better, might be worse. Who knows over a long period of time? We're in an industry, in a niche that you never know what's coming around the corner. However, what we can do is forecast a more stable performance by, again, diversifying the approach, so that even if somebody's going through a period of really poor performance, you might still have 100 traders who are having a really good period of performance, and therefore it would balance it out, giving the equity curve a little bit more stability. Anno said, actually, no, but you did answer my question. If I understand correctly, the risk management engine or Darwinex Lab risk management can intervene both at individual Darwin's level or at aggregate index level. Thanks. Please correct me if I'm wrong. Yeah, so the risk engine runs 24/7 on any given Darwin. So it's going to be monitoring your exposure 100% of the time, 24 hours a day. So for individual level, your exposure increases past the threshold of what is normal and what the risk engine wants to see over a standard period of time, which we call D periods, then it can reduce your exposure on any given position. That will happen on an individual level. The kind of group level index is more specific to certain groups of traders. So martingale traders, if we have too much of an exposure to too many traders, you know, positioned the same way on a specific asset, of course, we monitor their value at risk as a group, and then we would potentially cut exposure at index level because it's only the index that is exposed to that group of traders. Same with you know, a correlation with a market direction. So let's say the index is too correlated with a bullish NASDAQ, right? We've got too many traders long NASDAQ, and that means our exposure is too high. We monitor them as a group, and we monitor their value at risk as a group, and we would approach that at index level, but we would never change it at Darwin level. It would never be intervened at Darwin level. So yeah, you're 100% correct. Strive Trader, I would be very happy if successful traders get the AUM they deserve in the long term through index. Me too. Nothing would make me happier. That's the whole point of having the index. It's a much fairer way of being able to reward fantastic traders. The only goals now and the main job now is traders need to keep performing. So the great traders that we see is their only job is to keep performance high. And, you know, and I'm not talking day to day. Like, you can have a down day, you can have a bad patch. We're not looking for perfection, but over 6 months, 12 months, 10 years, keep performance high. That's your only job. And our job as a business is to scale, bring more capital, and eventually filter that through to our traders. So it might not happen overnight. We might not be able to give every trader $1 million overnight, but, you know, in 10 years time, who knows where we're going to be. Our only job now is to scale. What is the rebalance frequency of the index? Is it discretionary or based on a schedule? So great question. Again, there's different answers to that, right? So the rebalancing generally will be done month on month. So again, going back to what I said earlier in the presentation, I'm not sure if you was here, Londondale, but Javi gets a list of traders on a monthly basis based on his criteria, who he's going to analyze and then, you know, put forward to Darwinex Labs and therefore the index. So that would happen on a monthly basis. However, every trader, like I said, has a stop loss or a hard stop loss of minus 8.5%. So if a trader hit that stop loss mid-month, of course, that stop is going to remove them from the index temporarily, at least. And so that would kind of be rebalanced on that day. So it's kind of two answers to the same question, but I hope that makes sense. So I'd say a bit of a hybrid based on schedule and discretionary. Strive Trader, I know a lot of good Darwins who, based on their performance, should have significantly more investors. Unfortunately, the big money is spread over only a very few Darwins. Yeah, 100%. I completely agree with you, right? We, honestly, as a company, we're not perfect. We know that, but what we are doing is we're trying to do everything that we can to be more fair and to, you know, reward the traders who deserve it. So what we're doing with the index, it's our move to try and get that capital distributed more fairly amongst traders. What we would love to see as a company is, you know, 100 traders with $1 million under management. Okay, but it's difficult to do when investor capital gets diluted into a specific Darwin or into a couple of specific Darwins. And what tends to happen with that is when it rises above a certain level, you know, when you're comparing one strategy to another, even you know, subconsciously, if I'm looking at two equity charts, I don't really care about that. If I'm looking at the investor capital and I see 5 million's invested in trader A, but only 20 grand is invested in trader B, but their equity curve is exactly the same, you're subconsciously going to feel more comfortable. You know, basic human nature is to feel comfortable in crowds. They will see, there's 5 million exposed to this. I'm happy to be a part of that because if I go down, 5 million goes down, makes me feel less bad about my decision. I'm happy to jump on. Whereas when you look at the 20 grand account, you'd be like, I'm going to be one of two investors in this account. If things go belly up, it's going to be me and somebody else. I have to own that decision, right? So people seek comfort in that, which when it comes to something like Darwinex, can be an issue because that can spiral and spiral and spiral. And like I say, you might have a trader who has a very similar performance, maybe even better performance, but gets overshone because of this shiny object over here where people are just flocking to because they're seeking comfort. With the index, none of that is there. It's more, it's distributed fairly to our top performers. Of course, it's down to you to perform. You have to perform, and you know, we can't just give everybody AUM. I wish we could, but you have to perform and show that you're deserving of AUM, and we're more than happy to give it you. The caveat to that, again, going back to my point, is we have to scale as a business. That's our job. We have to bring investor capital. And believe me, I have huge vision and huge hope for Darwinex growth over the next 2, 5, and 10 years that I think, you know, trading with us will be a no-brainer. Anno said, thanks. Last one. Just to be 100% sure, the performance of the index I would hold would have matched exactly the performance showed in the returns, except obviously for the fees. Yeah, so if you're buying into the index, of course, I know what you're trying to say. You're basically saying there's not going to be a differential in performance based on your account to the index. That's exactly why we measure the investment capacity, so the max investment. We want to make sure that your performance is going to be exactly the same as what we're displaying to you. Of course, we're regulated as an asset manager, so we cannot we cannot advertise a strategy or a system or a product that, you know, does 20% per year, let's say, and then we know that our investors are only get 5% per year. That would be a one-way ticket for us to lose our license. So we absolutely cannot do that. So of course we're measuring the toxicity flow of the orders to measure the divergence sensitivity between trader and investor, making sure that there's no gap. And then of course we can say, well, there will be no gap up until X amount of millions or X amount of hundreds of thousands. And at that point, the cap is reached for that trader. Rain, hope Darwinian silver Darwins can be selected too for the index if they have consistent records. If index capacity is exceeded for selected gold Darwins, it's like backup players to serve more investors. Yeah, I mean, there's a couple of caveats to that, right? There's one is their track record is probably a little bit too short in length at that given time, so we can't give them capital really until their record's a bit longer. If you're talking about somebody who has a consistent record but hasn't reached gold, it will be very difficult to have a long-standing record because we have the performance targets and the track record length. So if you're looking at somebody who's got a 2-year track record but is not in gold, that would mean they haven't made 20% return. Okay, so, you know, after 2 years, risk adjusted 20%. You know, the problem with that is we have such a great bunch of traders. Like we've already selected, you know, 100 plus, 150 plus fantastic traders. Do you want to bring in, you know, somebody who hasn't quite achieved the same? It gets a little bit more tricky when we're kind of doing that. You know, you kind of got to see it as a stepping stone. So I need to get to Darwinia Gold. Once I get to Darwinia Gold, then I'm open to investor capital, the index, you know, bigger Darwinia allocations. That should be the goal. That should be sort of the benchmark. And like I say, if you go past that 8-month track record, not saying that you have to make 20% within 8 months, but if you're 2 or 5 years down the line and you haven't made 20%, it kind of tells you that they shouldn't be included in the index. I know, unlike an individual Darwin where investor performance can be quite different from the displayed returns because thanks to the risk engine. I mean, that shouldn't be the case. You should see, I mean, of course, it depends on where you buy into the index, obviously. Oh, sorry, where you buy into the Darwin. Because the Darwin might have a positive month, for example, but if you bought in just before a drawdown period after their peak in equity, of course, they would be up, you would be down for a period of time, but it shouldn't be different. The risk engine will change from the signal accounts of the MetaTrader to the Darwin. DB, is it fair to say this index will take investment away from individual traders on gold? Would this also be in the interest of Darwinex? How many traders Darwins can be in the index? Thanks. No, the index isn't going to take away investment from individual traders on gold. I mean, investors have been happy with the way that things have worked for the past few years. So I'm not imagining that, you know, loads of investors are going to pull their funds and go straight to the index. However, having said that, if you're a trader in gold who has investment, it's very, very likely that you will receive index investment, because if an investor has seen your record and has decided to invest capital, they've probably done some due diligence, which means you would probably pass the same sort of checks that we would do at Darwinex Labs. So it's not going to take investment away from individual traders. If anything, it's just designed to bring more capital and bring more investment to those traders. London Dale, can I invest through SIP? I'm not 100% sure. Ignacio, I would appreciate if you could clarify that for me, please. If you're still around. There you go. Ignacio is typing. Not sure yet. I will investigate. Awesome. Thank you. London Dale, if you want an answer to that question after the session, please just send me a direct message and I'll Ignacio can feed it back to me and then I'll bring you the answer. So don't worry about that. Daniel, what will be the minimum time an investor should commit funds to the index? There is no minimum time. So you can pull your investment at any given time. We don't have a minimum investment period. The only thing is you can deposit or withdraw once per day. How many Darwinia gold traders do you currently have? Let's take a look. I think it's just under 300 if I'm not mistaken. Yeah, 295. So we currently have 295 traders, which means, you know, that's almost 300 traders that we have to choose from right now. Meaning roughly 50% of them, maybe just under, are already included in the index. 295. Ignacio's on it. Thank you, dude. And hope, you know, the great thing with gold is month on month, this will just keep growing. It will just increase because, like I say, there's a time element to it. So we do have traders who hit the 20% performance target before they hit the 8-month track record. And then all it is a case of them keep trading and keep performing well. You know, and what we see is the number of traders that migrate from silver to gold each month increases as well, because just the rule of time, right? There's more traders coming on each month, and therefore 8 months down the line, there's going to be more traders eligible to move into gold. So this number will grow, but currently we have 295, and then in silver, we have 8,628 traders. So the 300 in gold are creme de la creme. Right, guys, I think that's all of the questions from all of the platforms that we're streaming on. So I just want to say, before we wind this up, a massive, massive thank you to everybody who's attended this session. I hope I've done a good job in conveying the importance of the index for Darwinex as a company, how it benefits traders, investors, and Darwinex alike. London Dale said, excellent presentation, well done. I appreciate that massively. Thank you very much. Again, these presentations and these sessions are only as good as you guys coming in and interacting with me. Again, I say it on all of my sessions throughout the week. I say if it wasn't for you guys, I'd just be a sad man staring at a camera talking nonsense all day. So it's really refreshing to have guys coming on and interacting with me and asking me lots of questions and good questions as well. So I appreciate every single one of you who's been in attendance today or who's watching a recording of. We've got one more question. Andres said, thank you. It's an absolute pleasure. Thank you for all your questions. Rain, thank you to you as well, dude. What happens if the gold Darwin is allocated to index, but later goes into silver? What happens to the traded allocation? Closed at a loss or continue trading? Fantastic question. Okay, so when a Darwin moves to gold, they will be open to investment forever. So even if they drop out of gold and go back into silver, it doesn't matter. They will always be open to investors. Now, what that means is that even in the index, I mean, it's quite a rare occurrence because, again, the track record length is kind of the most important thing that we categorize the traders on or judge the traders on. So realistically, most traders that are in the index won't have this issue, but hypothetically, we won't just close out their allocation. Again, it will be based on the stop loss. So they'll have an 8.5% stop loss on that account. But like I say, it's probably a bit of a unicorn case unless the trader has a very short track record length. But fantastic question, nevertheless. Bruno, Anno, it's an absolute pleasure. I hope you all took some value from this. Appreciate you, Ignacio. Great job, Kieran. Cool. Thanks, Kieran. I have no more questions. Again, guys, if you do have any more questions, please don't hesitate to get in touch. Feel free to email myself, Ignacio, the info@darwinex.com. Anybody on the team, feel free to email us, reach out to us via social media, or direct message me on Discord. It's probably the quickest way to have a conversation if you've got any direct questions that you need to ask to me. But guys, without further ado, we're going to wrap it up here. So I hope all of you have a fantastic morning, afternoon, evening, wherever you are in the world, or whatever time of day you're watching this presentation on. Have a fantastic rest of your day, and I will catch you in the next one. Peace out, guys. Bye-bye.